Good morning, students. Once again, welcome to Corporate Accounting class. Students, today we will study another method of valuation of share. That is valuation based on productivity factor. Here, productivity factor is calculated taking into consideration the average weighted adjusted tax profit and average weighted net worth. That means productivity factor is equal to average weighted adjusted tax profit divided by average weighted net worth into 100. This is the formula for the calculation of say value of equity share based on this productivity factor method. And based on this method, we will see one problem, and which is also asked a problem in your previous MCOM examination. Let me see that problem, and already I have given you that problem. Once again, I want to repeat the same. There is the following figures led to a company which has 10 lakh in equity shares and rupees 3 lakh in 9% preference shares of rupees 100 each. So here, information pertaining to average net worth and adjusted tax profit is given, that is year-wise. 2010 average net worth excluding investment 18 lakh 60,000. Then for the same year, adjusted tax profit is 1 lakh 90,000. Then 2011, average net worth was 21 lakh 50,000, and for adjusted tax profit was 2 lakh 10,000. 2012, average net worth was 21 lakh 90,000. Then adjusted tax profit was 2 lakh 50,000. Then the adjustment. The company has investment worth rupees 2,80,000 at market value on the valuation date. The yield in respect of which has been excluded in arriving at the adjusted tax profit figures. It is customary for similar companies to set aside 25% of the tax profit for rehabilitation and replacement purposes. Next, on the valuation date, the net worth excluding investments amounted to rupees 22 lakh 50,000. The normal rate of return expected is 9%. The company has paid dividend consistently with a range of 8% to 10% on equity shares over the previous 7 years, and it expects to maintain the same. You are required to ascertain value of each equity share on the basis of productivity by applying suitable weight. So here, the thing is simple. Its calculation is pertaining to average weighted adjusted tax profit, then average weighted net worth. So this is the two main aspects here, especially for the calculation purpose. Now, as a first step, we will calculate, that is calculation of, writing here, calculation of weighted average net worth, average weighted net worth. Here, make column like this with the necessary information. The first one is here, then second information is average net worth, average net worth. Then we'll apply weight. Here pertaining to weight, we have given information. Just apply weight. Here we are making the weight 1, 2, 3 as an assumption. In the last column, total average, total average weighted weighted net worth. So like this will make the column. And the year 2010, 2011, then 2012. Average weight net worth. You just see the column that is here in the column. Average net worth, excluding investment. Average net worth 2010, 18 lakh 60,000, then 21 lakh 50,000. Next one is 21 lakh 90,000. So here we are making the assumption. This weight we are giving 1, 2, 3. So sometime in the problem directly they will give this information. Sometime may not. Okay. I hope it is clearly visible. Okay. Then we'll go with the next aspect, that is the multiplication. So 18 lakh 60,000 into 1. It means the same 18 lakh 60,000. Then 21 lakh 50,000 into 2. So it becomes 43 lakh. 43 lakh. Then next one is 21 lakh 90,000 into 3. It becomes 65 lakh 70,000. Total. These two columns. One is weight column. Another is the total average weighted net worth. So here total of the weight is 6 and total of this column is 1 crore 27 lakh 30,000. Now we will calculate average weighted net worth. So that is equal to here total weighted net worth. So divided by total weights. So here total average weighted net worth is 1 crore 27 lakh 30,000. So total number of weight is 6. So final figure is, so right here. So it is 21 lakh 21,667. Put it in bracket so that it can be seen very easily. Okay. Students, we have calculated the first aspect, calculation of weighted average net worth. Now we'll go with this element, the average weighted adjusted, say, taxed profit. So step 2 will be, okay, so calculation of, say, weighted and adjusted taxed profit. So here you write step 2, calculation of average weighted tax profit. So for this also prepare the table according to which the solution. So first one is here. First one is here. Then second one is adjusted tax profit. Then weight. Last column total of average weighted adjusted tax profit. Okay. So like this, we make the column accordingly. Okay. Here the year 2010, 2011, then 2012. So as per the given information, so 2010, 1 lakh 90,000, then 2011, 2 lakh 10,000, 2012, 2 lakh 50,000. Wait, 1, 2, then 3. Okay. Multiply it. 1 lakh 90,000 into 1. So amount is 1 lakh 90,000. And 2 lakh 10,000 into 2. 4 lakh 20,000. And 2 lakh 50,000 into 3. So 7 lakh 50,000. Total. The total of weight is 6. And total of average weighted adjusted tax profit is 13 lakh 60,000. 13 lakh 60,000. Now we calculate, that is average weighted tax profit is equal to total of average weighted weighted adjusted tax profit, so divided by say it is total weights, total weights. So here total of average weighted adjusted tax profit is 13 lakh 60,000. So divided by total number of weights 6. So 13 lakh 60,000 divided by 6. So 2 lakh 26,667. It is the average weighted taxable profit. So based on these two factors, one is average weighted net worth and another is the average weighted tax profit. So very easily we can calculate here productivity factor. Okay, students. Okay, now we come to the third step. Third step. Okay, the calculation of productivity factor. Here already I have written the formula. Okay. So two steps are over. Okay. And this one I will consider it as what actually required. Okay. How it is visible. Okay. So third step, productivity factor, that is equal to average weighted adjusted taxed profit divided by average weighted net worth. So apply the formula and we have calculated here average weighted adjusted taxed profit is, see the step, okay, previous step, the yes, second one, 2,26,000, yes, 667. Then average weighted net worth is 21 lakh 21,667. Correct. Into 100. Into 100. So you get the productivity factor. So productivity factor is 10.68 percentage. 10.68 percentage. Now, okay, based on this information, further we will move. That is fourth one. Step 4. Calculation calculation of profit labor. Profit labor to equity shareholders. Equity shareholders. So for which we need to follow one will be for particulars, another for amount in rupees. Yes. First one is maintainable profit. So maintainable profit is calculated, okay, by taking productivity factor and applying it on the say net worth excluding investment. So here in the problem, the information given, that is on the valuation date, the net worth excluding investment amounted to rupees 22 lakh 50,000. So here 10.68% of 22 lakh 50,000. So this becomes 2 lakh 40,300. Okay. Minus rehabilitation and replacement replacement reserve. Yes. It is 25% of 2 lakh 40,300. So it becomes 60,075. 60,007. So balance is 1,80,225. From this, you have to deduct this preference dividend. Preference dividend. So these 3 lakh into 9%. So 27,000. The balance is 1,53,225. Now, let's move to the next one. That is step 5. Calculation of total assets. Calculation of total calculation of total assets. Here, we follow all particulars and amount in rupees. Here, that is capitalized value. First information, capitalized value of profit 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 to equity shareholders. So here it is calculated. So this one you have already calculated profit available to equity shareholders. That is 1,53,225. So divided by 9 into 100. So it becomes 17 lakh. 17 lakh. 2,500. 2,500. And one more we have to make addition. Was what included. Value of investment. Value of investment. So it is market value. So 2,80,000. 2,80,000. So total is 19,82,500. Yes. Last step is there is sixth one. Calculation of value of equity shares. Equity shares. So value of equity share is equal to here value of total assets. So divided by number of equity shares. So here the total value of assets is 19,82,500. So divided by the total number of equity shares is 10,000. So divide it. So it is 198.25 will be the value of equity share as per say productivity factor method. So students, it is a appeared question in your lengthy marks question in your question paper. Please have the attention. If you have any doubt, you can ask.